welcome back. I changed a couple of mic settings here. I noticed that the noise gate was kind of chopping my voice on some of the last videos, so hopefully this video goes over a little better for the audio. Anyways, this is part 2 of my 30-second model journey, and here I'll be covering some of the losses that I've incurred, just as kind of one, show you that there are losses, they do exist, and see if there's anything educational I can pull out of that for you guys, and then potentially move into any other words of wisdom or things I've noticed about how, well, one, I trade, or two, how I am able to be successful with this model. And then a little bit on my risk management. And hopefully I can make this a little quick. I want to keep these under 20 minutes, but I end up going 30, 40 minutes. So I apologize. And I thank you for those who watch, and find value in these videos. So in any case, let me get one thing out of the way here. I do want to share that. How do I move this over to this screen? Yeah. I got funded. It's a 25K account using this model through Apex Trader Funding. If you're interested, they do almost always have a sale going on. There's a link in the description. No pressure. Don't really care if you use it or not. Commissions are only like, $1 or $2 per account. So, I'm not making millions off of commissions on these things, but if there's a discount that could help somebody get funded, or at least start their funding journey, get an eval going, I'm gonna forward that on to you. I don't have a list of a million different coupon codes. I'm not an affiliate marketer. I'm not even a YouTuber, really. I'm just a trader. So, my experience with them has been good so far. Working on my first payout soon. I just started trading on this week. So it'll be at least another week or two before I'll have acquired enough profits to request a payout, my first payout. I'll let you know how that goes too. But yeah, I'm feeling proud about it. So I got funded with this model, and there's your proof. So it can be a thing. Let's leave this here actually. So let's go back to the spreadsheet. It does encompass any stats that I have up here. It does encompass the last 10 days or so of September, but for the most part, this is all of October, and then one more day, which is a break-even day anyway, before I started trading on the funded account. So we've already talked about, at least I'm pretty sure we already talked about my couple of lost streaks. I kind of spiraled, and it happens. I've learned from it and now have rules in place to avoid that. Like, I will not continue trading if I've taken 2 losses in a row. I'm done. That'll avoid me taking strings of losses trying to recoup and just make things worse for myself. So the other thing is always use a stop loss. If you don't use a stop loss, just stop watching this video right now. So I don't know. I'm going to just open some of these up. I don't know which ones are going to be good and educational to talk about. Well, I mean, this is one that I feel like it is important to mention. We're trading with a fixed stop loss with this model. It's a 12-point stop loss, 12-point take profit. I have it drawn all the way down to my target, because I was calculating how many handles it is from entry to target. So I was just framing that out, right? So sometimes 12 points isn't enough, especially when it's in market hours after 9:30. I like to take a lot of my trades 8 to 9:30 pre-market. Most of them, 68% of my wins happen pre-market. 60% of my wins happen during market hours. So most of my wins happen before the market even opens, and then I just go back to bed and let the chaos play out for the day, and I don't have a care in the world. Kind of a nice feeling. But anyway, sometimes 12 points isn't enough, and it wasn't here. So if you know what you are, this happens to be, I think, just a reversal. I'm going to talk about that too. This model is good for reversals and continuations, so hopefully I don't forget that. If I do, comment below so I can touch on that in the next video. But 12 points isn't always enough. So if you know what you're doing is right, you know your framework is right, look for the next opportunity, or enter right back in. I've done that too. It stops me out, and I'm like, no, this is right, and I'll just enter in at the top of that. As soon as it hits my stop loss, I'm like, nah, I don't want to be out yet. So I just re-enter. I wind up getting a better entry sometimes, but sometimes not. And you can see I did enter a little late. Missed this one for whatever reason. I can't remember why. This was a while ago. But can I zoom up? Yeah. You can see this candle right before my entry tapped a fair value gap in the direction towards my draw. That would have been the perfect entry. I think I waited because it came back down, and then it came back up again. And I was like, yep, let's do it. Got in and I'm pretty sure it took my 12 points, even though it went past my draw. I don't think I tracked how many. Oh, was it right after? Nope, I don't think I tracked that one. That is not good. Why didn't I do that? But anyways, 12 points isn't always enough. So you may see in here that I re-enter. You may not, but that's okay to do. Look at this mess of a day. Okay, so there's no context here, so I'm not sure, why that would have lost. I tried to chase it and bought another one and came out a little bit above break even because it started turning back around. So don't do that. Don't chase price. Wait for your setup. Just follow the rules. I promise you, it's fine. It will be fine. Chasing price is not what you should be doing. So it continued on in my bias, my original short bias, my bearish bias, order flow, whatever you want to call it. Tapped a fair value gap and I sold 12 points, done and done. It came back up into this tiny little fair value gap and I was like, sweet, let's do it again. No, this is a long. I was all confused this day. So I thought maybe I was going to reverse here and I went long. It totally didn't. Had another loss. So -1, +1, -1, -1 again. This is bad examples to really be educational on because it's just a mess. And I don't know how to give you anything concise out of that. Not embarrassed by it at all. Just it is what it is. Here. This is a pretty good one. So took my short. Yes, there were earlier entries. I can't tell you why I was late, but I was late. My guess is I hadn't sat down at the charts yet, or I had stepped away to go to the bathroom or something like that, or just straight missed it. I mean, I can't remember. So I could have just missed it, but, I didn't take a full 12 points on this, but I also took more than one contract. So that's the reason for that. But it 12 points is usually just works out just fine. Tapped it, tapped my stop loss by a tick, as you can see, which is an uncovered fair value gap up there still, and there's an order block. So I'm like, you know what? I think I'm still right here, and it's tapping these PD arrays. So I'm going to re-enter. It came back. So it was looking good. Came back up. Tapped another fair value gap, and I went for it. I think this is still pre-market. Yep, still pre-market. So I went for a second one, feeling all ICT like. It took my profits a little early, but I had made what I would have made had it been one contract, and made up for the loss as well. So -1 and then plus, almost +2. I think it was plus like 1.5. But not just another example. Sometimes 12 points isn't quite enough. I do find 15 to be a whole lot better. Honestly, almost any time 12 points isn't enough and it still pans out, 15 handles for a stop loss would have been just fine. But I haven't done any back testing to see if I should do 15 handle TP and stick with the 1-to-1 or anything like that. I just have noticed. So what did I do here? I tried to go long, got stopped out. I'm like, no. We're order flowing. I know this is right. Went long. Caught more than... So that was the loss, and then caught 24 handles minus the spread. So made up for that. First loss of the day. This should be a good just single trade on the screen. Nope, because it's the wrong screenshot. Oh, no, it's in there. No, it's in there. I went short on this fair value gap, got stopped out. It rated, hit an order block, equal highs. So I went short again. And the news saved me. This isn't a good one. Don't trade the news. I did anyway. So let's see. Why did I? So I went short here. I think because it was just following order flow. So we were coming down. We had moved bearish. Well, I don't know what exactly happened. London high was a raid in itself. So we were coming down from that raid. Retraced into a SIBI, came down. Retraced into a SIBI, came down. And so I went short when it came back up into a fair value gap after doing that order flow, and it just wanted to go a little more. Pre-news, I'm not surprised. Things don't always, turn out very well. Half hour to an hour or so before a news event is to take place, price action just wiggles around and doesn't follow the algorithm the way it normally should. So I'm not surprised I got stopped out. Probably intentional so that the news could take off and knock some people out who've been short, because that's the way the algorithm works. But I did get back in. So my exit arrow for the buy limit is going to be way down here, but it really was like right here. It just always shows at the top or bottom of the candle. But anyways, yeah, I don't know, how many of these I should really go through. I can go through like the first loss of the win or the loss streak. Let's see. So I wanted to go short and pre-market open. There was a 5-minute. So we're kind of bearish. So I'm somewhere in here. So London came up and took out some old session highs, Asia and New York PM session highs, and just kind of hit this big blocky price action from the previous morning, but London came up and rated that. So I'm thinking, cool, we've got a raid of some kind here. And so, yeah, I had reacted really nicely off of some of this stuff down here. You can see these wicks. But I think that's after my trade. So anyways, it came up and rated, came down. This candle after the raid, this right here, this bearish candle, 5-minute candle. So we have a raid, a 5-minute down close candle. And then I go over to I can't scroll sideways, over to the 1-minute chart and hit the first fair value gap right here. So it followed the rules. The short failed. I went long impulsively and lost there too, trying to chase price. So that's a common problem for me. I almost did it again today, actually, now that I think about it. And then I just tail spun. And that day was really, really mentally tough for me. So I'll cover this one because it's actually some good documentation on here. So, okay. My shorts are in here. Yeah. So we're kind of, it's hard to say. There's a big bearish run, but we're kind of bullish in the recent price action. So what I'm looking for is a reversal. I'm still, let's see. Okay, so yes, London had rated previous highs. Now I'm looking at the New York morning session after 9:30. It had rated even London highs. So we have taken out even more highs than I thought we were going to. And having big wick rejections, I didn't think it was going to continue to go higher. So I decided we were going to be shorting. And that last candle peaked the high at the New York morning session. And then we had a bearish down close candle right after. I've highlighted that bearish down close candle here for the sake of the screenshot. But what I'll do is make sure this closes first and then go into the 1-minute chart. I highlighted it because it's easier to talk about. This would have been the first 1-minute candle I was looking at, which is dropping even lower and lower and lower and lower. So I know I'm going to be shorting. Take the first fair value gap. 12 points isn't enough. And 12 handle stop isn't enough. I tried the inverted fair value gap. Again, chasing price. And it didn't work out. But my trade idea did. It's just 12 points wasn't enough. There was this imbalance here. There was maybe a tiny imbalance here. It looks like it ticked up into. So if you know your idea is right, don't try to chase price. Just find a re-entry somewhere. Enter on the next fair value gap. Enter on the next fair value gap. Keep your target the same as it was for your original trade. So let's say you take a minus 12 here, you enter on this fair value gap. You might have taken a minus 12 here. You enter on this one, and you'll take, for sure, at least a +2, and you'll be back to break even. Depending on, if you get in with just one contract again or whatever it may be. So I have done that, and it comes all the way back down and either breaks me even or gets me profit back. It sucks to have to do that. But it also kind of sucks to deal with a fixed stop loss take profit kind of model, because most of us know we would have probably aimed for something, like it starts to reverse here. So you draw your fib from that high to that low and take the one that's above 50%, which is probably this one. And it would have been almost zero drawdown and turned out perfectly. This model doesn't incorporate that. While it could, There's many instances where it just taps that first one and keeps on melting or rallying, depending on the direction. But that's not this model. That's not to say that it couldn't be helpful or that there aren't successful models that do that. But that sucked right there. So I tried again after another. This would have been a rate on the 5-minute. These candles here, it rated again and came down, waited for a 5-minute down close, which is this, that big one. And then it retraces into a fair value gap for entry here. 12 points is not enough yet again. And I left it. Draw was hit after the third trade without hitting the stop loss. So it's just off screen. I think it's just over here. But you can see here, it does end up hitting my draw. So I had the right idea the whole time. And I just couldn't get a right entry. And welcome to the life of trading. But if you learn that what you're doing, if you learn that you're right in the framework that you're laying out here, you feel more comfortable with taking an entry after getting stopped out, or a continuation a little further down, or a little further up, depending on the direction. So, yeah, it's not easy. It's not easy. It gets tough. I don't know. What are we at? We're already at 20 minutes. I think that's enough of covering the losses, really. And so what I did want to cover was a quick couple of stats for just basically the month of October and including the last week or so. Let me see. Tuesday, so 2 weeks. We'll call it 2 weeks. So a month and a half of data here. I was at a 63% win rate because I let myself spiral down here and took a good number of losses. But if you control your loss, my hard and fast rule now is to not take more than 2 losses a day. Just be done. I would have been over 70. So it is a very good win rate model if that's important to you. Most of my trades happen pre-market. You have to have the right margins in your account to be able to do that, or the right broker to be able to do that. But that's not to say market open during market hours doesn't have more wins than losses as well. And then I calculated if my draw was hit on any given framework for a trade, and if my stop loss was hit before it moved all the way to the draw. So sometimes you'll see it'll hit your entry. I'm going to let's go back to that screen. So sometimes price will be moving down and it'll come up and hit your entry. And then let's do here. I'll try to make this. Whatever. Price is coming down. It comes up and hits your entry and then moves in your direction, hits your TP, but doesn't really go any further and reverses all the way back up to your stop loss. Whatever happens after that, I guess, doesn't really matter, but I continued to watch to see if my draw was ever hit later. And maybe my entry was during some other retracement or just too early in general. 12 points is not a lot when it comes to market open hours of NASDAQ. 12 points can happen in the blink of an eye. So it's very likely for price to blow your stop, but then completely rally or melt in the direction that you're looking for and hit your draw, your target. So what I wanted to calculate with that, or at least kind of gather the data of, is my framework for picking my targets and my bias really accurate? And is 12-point stop loss enough? But I didn't count. Actually, I did. Right. This is everything with a Y. So 62 times out of draw hit. And I didn't mark that last one because I didn't go back and look. So 62 out of 76 times. Maybe 77. My draw was hit. My framework was correct. So that's pretty sweet. 29 of those times it went straight to that target without coming back far enough to ever trigger my stop loss. So almost half of the time, it moves in my favor all the way to my target. So what I did with that then at some point, so I was calculating points from entry to my draw. And if I had, how many points I would have gained had I held to my draw. For instance, this week I only took 3 trades and only got 36 points, 3 12-point trades. Had I held it to my draw, I would have gotten 209 points. And I didn't start that until here, but I will be continuing it here on my funded account spreadsheet. So it's just interesting to see that kind of data. For risk management, basically what I'm doing right now is following ICT. Oh, don't worry about that because I'm not there right now, but I'm following ICT scaling plan to a degree. Right now I've got a 25K account, so I am somewhere between 23 and 24. Between 23,000 and 26,000. I think let's bring it over here. 25,223. I was at 25,3 something, but I took a tiny loss today. Like 4 points, something like that. So I'm somewhere in between here, which is one contract. I'm not shooting for 120 points a week. That's a lot. I'm shooting for 60. So half of that. Shooting for 60 points a week. But I can make it work for me and like the actual profits that I would want. With about 1 win per week. I'd like to do at least 2 wins per week because then I can take some for me as profit and leave some on the account for account growth. You got to factor in the fact that you want to grow your account as well as take profits. So I'm doing that. I'm following this scaling plan, which I covered in my last video a little bit too. It just helps you determine at what price do you move up to the next contract. Essentially, it's like a 1% risk, to be honest. So yeah, I think that's really it. I did start 2 more funded evals that are linked to this, and so I use a trade copier through Trade of 8 to copy all my trades to all the accounts. Anything I take on my live performance account gets duplicated to my evals. And so eventually I'll have 3 accounts, and hopefully by the end of the year I'll have a 4th. So the plan then is literally 1 trade a week for starters. 1 trade a week, which is 12 points, $250. That gets copied across 4 accounts. What does that come out to? $1,000 a week. For me, that is what I used to make pre-tax at my day job. That's a pretty decent amount of money for most people. It's not rich. It's not lavish. I can't, live in luxury with $1,000 a week, but it will significantly change my life and be able to equate to a livable wage. Realistically, I could skate by with a little less than half of that, but I don't want to skate by. So the goal is to build up to 4 accounts. It's $100K in funds and trade that for a little while. What I can do, that's what I can do with one trade per week, copied across all 4 accounts. As I get more comfortable and things continue to progress and get better, it'll be a trade a day. Well, it'll probably be like maybe 2 trades a week, maybe 3 wins, I should say, a week. Then maybe I'll go to a win a day. And now we're talking $1,000 a day. That's, 30, no, because there's not 30 tradable days. I don't know, $15,000, $20,000 a month. I would be floored at $10,000 a month, floored. So you can just see the model isn't what's holding you back. The win rate isn't what's holding you back. It's really not. It's not. It's your capital. If you have adequate funding, and I'm finally realizing this because I've been trying to do this off a personal account with like $2,000, $3,000. And you have to trade micros with that, or you're going to blow it in a week. You do. And on a model like this, that's $25 a trade. That's insignificant to almost anybody. $25 a day is hard to be okay with, which led me to overtrading. Sometimes I'd try for 2, 3, 4, 5 trades because I want $100. $100. That's something substantial enough to make me accept it. $25 doesn't mean jack to me. So, turn that into minis though. That's $1,000 a day, just scalping away, on one account. That's tough. That's like a lot of work. That's stress. That's mental capital. So it just translates up. Go get funded. Go try. Use a model that works well for you more than 50% of the time. Go sign up for an eval account. Apex has discounts all the time. I paid $16 to start all 3 of these each, $16 each to start all 3 of these funded evals. There is some fees when you pass to activate the live, actual account. But it's inexpensive and you get funds. So I'm already at $200 for the week. That could be fine. If someone handed me $200 every week, I could pay my rent and things with that. So just don't try to do things too fast. Don't try to expect you're going to be making $10K a day. Give it time. Give it time to develop. I don't think I have a whole lot else to really cover. But if you have any... Oh yeah, I had you guys ask me some questions. Let me see if I can pull that up. I only got a couple of questions, really, but that's okay. So somebody asked if you could show what strategy you utilized. Nexus versus Singularity. So I'm not sure what you mean by what strategy I utilized. Utilized being past tense. So when are you asking, did I use these? I'm not sure. What I can say is my Singularity model I thought was super fantastic. And it really is a good model. It allows you to get kind of it's basically the 2022 YouTube mentorship from ICT. But instead of a fair value gap for entry, it's the extreme order block, which gives you the best entry. Because it's the deepest retracement. So what you'll see is, this is going to go into way too much detail. What you're going to notice with PD arrays, there's a PD array matrix. ICT has it in his core content, I think. He's got a video about PD array matrix somewhere, where I wonder if I can find it. Hang on. PD array matrix. Yep, found it. Okay, so this is the PD array matrix. What you'll, at least in my version, because I shortened it a little bit, current price is here. So whether it goes up or down, the first thing that it's going to interact with is an imbalance, a fair value gap somewhere. So as you're thinking about the 2022 mentorship model, it does a market structure shift and then retraces into what first? A fair value gap. What could be next? A breaker block. Go check it out. The next thing that it could line up with, that market structure shift low, or let's talk about a short. So it raids a high, market structure shifts a low, and then retraces up to a fair value gap for your entry, and then just melts down from there, ideally. The market structure shift low that you're waiting to be broken, that's the low of the breaker block. So it could come up past your fair value gap, tap that candle, the breaker block. The next one up is an order block, rejection block, or mitigation block. Mitigation's kind of similar to breaker block, but I find it to be less important than a breaker block, less significant. That's why it's up higher on the list. This is order of priority as well. It'll react to a fair value gap way more often than a breaker block. But if it does come through the fair value gap, it'll react to the breaker block, right? If it comes through the breaker block, it'll react to one of these next. Rejection block is kind of the top wick of a peak or a valley in price. Go watch his order block theory videos for real explanations. And then the last thing possible is an old high or an old low. It can raid that old high or old low, let's call it a high, and melt down from there. So you can just see like the order of operations for PD arrays. And I don't remember why I was talking about that. Oh, because the order block for the singularity is just higher up on the PD array matrix. There's not much left to go any deeper to react off of. So it gets you the best entry. Outside of that, I mean, and to be honest, it just didn't come up here a lot. It reacted off of the fair value gaps way more frequently. So I missed a lot of stuff. And I just started taking fair value gap entries, even though I was trying to utilize the singularity model that I came up with, which I probably really didn't. Somebody probably came up with something very similar to that before me, but I don't know everything that's out there. So I just found myself liking fair value gaps a lot better, which makes sense because they're most important priority on the PD array matrix as explained by ICT. So I love fair value gaps. Love them. On all time frames, they're the most common thing I look at for anything, for any movement, for any reaction, for anything, is fair value gaps. I don't really look at any other blocks. Sometimes an order block. Sometimes. But I don't even look at breaker blocks, mitigation blocks. I don't do the blocks. I don't like them because I'm not very good at identifying them or understanding how price reacts with them and the nature of it. I like and know fair value gaps a lot better. So that's that. Nexus is an incredible strategy. Incredible strategy. It works very well most of the time. It does not work very well when the market is range bound, when it's choppy, when it's a really news heavy week and price is just not behaving. We'll call it textbook. You don't get trades every day. You sometimes don't get trades in a whole week. And that's just the way it is. But it is good. I think I have some back testing. This is going to be a lot more confusing to look at, but we'll focus on win rate in any particular month. When I back tested, yeah, was this back testing? Or was back testing? Okay. So this was like simulation trading where I'd play it one candle at a time. It wasn't like a hindsight back test. It was like a trying to simulate live action. So anyways, July I got 84% win rate with a 2R. I got 33% in August with a 2R, 75 in September, 66 in October, which was a horrible month, and it was not good. This is all 2022. It was not good this year either, 2023. 80% in November, so I'm very looking forward to the rest of this month if it plays well like it did last year. Not very good in December, 40%. It's the first month under 50%, but you'll still see I did come out green for the month based on my current balance at the time and the contracts I was able to use because of that balance based on the ES scaling plan. This was all ES. So depending on your risk management, you can still come out positive even if it's less than 50% win rate. I know many traders, one in particular is a 4 out of 10, 40%. And he makes a living. Like this is what he does full time, and he does not live in poverty. We'll just put it that way. And he's a 4 out of 10 trader, but his win rate and or his risk management is impeccable, whether he uses multiple contracts for short gain or he uses one contract or whatever for a really big RR. I don't know all those details, but you don't have to be super high strike rate perfection. And then up again, 57% for January. So it's a great model. I highlighted all the losses in bright red. You get, I don't know, 1 or 2 a month. August was rough, but I think we had some good wins that brought us. We were still positive. So August and October were pretty rough, but I mean, July was beautiful. July was so fantastic. There was only one actual loss. Most of the data is based off of a 2R gain. I only had $3,000, but we gained 200%. So what is that? Quadruple? No, doubled the account. So think about that with whatever equity you have. In a month, you double your account. It's insane. So Nexus is fantastic. I did a lot of data. This is his spreadsheet, actually, I think. And I combed through his entire spreadsheet and found, here's most of his stuff without a lot of the data. I went through and did some of my own with adding more data. His whole spreadsheet and combed out all the errors, the invalid setups, found setups he missed, to be honest, and just kind of was really digging deep into it. And it's still above 60%, mostly above 70% on any given month. So Jay is an awesome dude. He's got an awesome channel, Nexus Blast Trading. I think it's just that simple. Nexus Blast Trading. Go check him out. I've got a video as well talking about all of that in much more detail, but yeah, super cool guy. So that was a really long answer for that question. Hopefully you guys are still with me. I appreciate your time. Somebody then asked, what's the sequence of thoughts or actions you take when you analyze the draw, or how do you determine which draw will be hit first and which draw will be hit after the first draw was hit? So how do I pick my targets? And once the target is hit, then what? Is basically the way that I'm reading that. And that is going to probably be a whole other video because we're already at 45 minutes. Go figure. Where I do want this spreadsheet, and I want this. So I know it's a 30-second model, and I know I've talked about it before in the last video, but I use the 1 minute chart. So how do I pick my targets? And all right, so here I'm looking for a reversal. I took a trade in the middle of it. So this is a good example of, it's not just catching the top of a reversal. You can catch continuations along the way. But I did a lot of dancing around in this hourly chart. As you can see here, there's a lot of executions, but we've got a really big push. In this case, a push up. I do want to say we probably took out a bunch of highs and stuff over here. So I'm expecting a retracement of some kind to take place. Maybe we traded up into like an hourly imbalance, something like that. Something I'm expecting a reaction bounce from price, which happened at the end of that day. So you watch what happens all the way through overnight session. London doesn't always do much of anything. But even London had a spike up, took out Asian sessions high, and then made a new low. So I was looking for shorts. And this wasn't even, this all happened before market even opened. My entry way down here was 850 something. So once it takes out a high, so we'll frame it this way. Once it takes out a major high, or like on an hourly chart, a major high from the previous day or previous week or previous month, something external, something significant, or hits a PD array on that chart. So like, or even higher. So if it hits an hourly fair value gap, if it hits a daily, weekly fair value gap, or if it doesn't both at the same time. So if this came up and hit a daily fair value gap from a previous, drop down, came back up, which is basically a retracement, hit a daily fair value gap, took out a bunch of highs. It's got liquidity now. It's filled an imbalance now. Algorithm is satisfied now. I'm going to start looking at, it's going to go the other way. We've got wick rejections on top here. There's this big one at the end of the day, but we got wick rejections on top here. The last thing that happened before close of the day was it wicked back down. It's, London's coming up and making a new low. So I just read through price and talk a narrative to myself about what price has done, what's it doing. And, you kind of learn as you're talking to yourself what outweighs the other, the signs of bearishness or the signs of bullishness. This is showing signs of bullishness for me. So this low and this fair value gap, that's right here, that was right here, that is a target. That's the first target that exists for my eyes. Is price is going to come back down. If it's bearish, it's going to take that out. Then you see what happens with that. Does it now take a low and hit an imbalance and want to reject, just like it could have done up here, and go back bullish? Or does it disrespect it, takes the low and blasts through this? It didn't blast through it up here and it turned around, but had it blasted through it, I'd still be looking for longs because it didn't react there. So it does not react here and it just blows right through it. So then what's next? The low down here. It's pretty much that simple. I just picked the low or an imbalance or both that are very close to each other as my first target. If it blows through it, what's the next one? What's the next one? You just ladder your way down. Maybe I can find another example just to help drive it home. Is this one going to be messy? I wish I had more data to really show, but so I could see what's happening, like context before all of this, but it looks like it's slightly coming up. What really made me decide, I don't even have a draw marked out on here, and that's a news event. Let's not do this one because it doesn't give me anything. All right, so see if I can read what I've got going on. We've got, as my notes show, we've got relative equal highs, London, New York AM, daily fair value gap low is here. So everything above here is a big daily fair value gap. We're trading. We might, so we tapped it with London because didn't we? We tapped it with London or somewhere in there. So we're trading away from it now. Making a low, retrace, making a low, retrace, making a low, retrace into this hourly SIBI, fair value gap. So as we're retracing into it, I notice we also take a 5-minute raid, which is part of the model. And so I zoom in, so it takes the raid and makes this bearish candle right there. So I zoom in, wait for the first fair value gap, tap. Boom, there it is. It did not go any further than that. It retraced up from there, would have taken out my stop loss and kind of wiggle around a little more, but then you'll see it shoots straight for my draw. Now my draw was spot friggin' on. It went through by only a couple of points and then rocketed all the way back up to that daily fair value gap because that's a giant magnet and should ultimately be your target. Yeah, it bounced off of here, but it's going to come back because this doesn't count as digging into it yet. So you can read some of these little scalps and little inner price actions, amongst the overall grand scheme of things. I do believe we came up in there. I can't remember. But that draw was picked simply because we came down, retraced into a 1-hour SIBI, made a low, retraced into a 1-hour SIBI, made a low, retraced into a 1-hour. I was just following the step down, step down, step down. And that was the last step. So kind of probably a lucky trade. But it fit the model. So I wasn't like, there's no way for you to know it's not going to go any further than that. There's no real way for you to know that price is done and it's just going to shoot back up here. My guess is there's probably over here some imbalance that it filled. It took that last bit of liquidity and just took off again. I also think that's 9:30, so it is not on the screen. Yeah, so when 9:30 opens, the whole algorithm changes anyway, and it goes off and does what it needs to do. You could even say the algorithm turns on in the first place if you believe in the whole algorithm thing, with which if you trade ICT you should. But she got activated and off you go. Things are a little different pre-market, but that's how I kind of pick my draw. It's just you get an idea of a narrative to yourself, and then what would be next as a target. So yeah, I bet you some of this I don't know where this is compared to that last one. One of these is daily, one of these is weekly imbalance. We came up into it, and look at us, just right at the top. I got to show this one. So we came up into it, totally disrespected this hourly one and went straight to the daily one or weekly one. I can't remember what. But we hit it, came back out. You can see we've got nice rejection wicks. I've been talking too much. My throat's getting dry. Should wrap this up here. This will be my last one. Nice rejection wicks. We're starting to come down. We had a down close candle on the 5 minutes, so we rated highs. We hit high time frame PD arrays and then had some rejection with a down close. I'm going to go look for shorts. So we had a nice displacement here, which created a fair value gap. The 5 minute candle closed at one of these two. Price came shooting back up into my entry, scared me a little bit, and off you go. Model panned out. Because it rated these highs, it went into high time frame PD arrays. I am bearish. It's reacting. It's moving bullish as kind of a rally, and you're like, oh my gosh, we're going up, we're going up, we're going up, until we get to something significant, like a high time frame PD array, like a weekly imbalance. It's going to fill that some and then move away from it. Now that it's done there, it's going to leave that area, and it can only go two directions, up or down. So once it's done up here doing what it needs to do, it's going to go down. So where is a target? Well, there's a bunch of equal lows right here that can't remember if this was a new week opening gap or a new day opening gap. Looks like it is a new day opening gap. And a new day opening gap. And I highlighted the 100% unfilled area because some of it did get filled. So from close to that low in there is like, it could come into here, which it ended up doing, but you want to see this get filled because it so far hasn't even been touched. So the high of all that sounds like a good place to make a target. We got relative equal lows here. Before any of it actually was before any of these lows were made yet. So the first one was made here on this, which was my trade. So disregard that. This was all the screenshots were taken after the fact, but, the high of the new day opening gap, relative equal lows here, and kind of the first significant low really. I mean, there's this one here, but if it's going to blow that one, it's probably going to blow that one too. They're so close together. So it's just kind of the next low and then the top of the gap that's already there that it's going to want to fill. Price doesn't like leaving new day or new week opening gaps. It likes to fill them, interact with them, stuff like that. ICT's got a lot of videos on those too. So anyways, that's how I picked my draw. Had it blown through that and filled this gap, had it blown through that, I would have expected it to fill the totally untouched area of the gap, then possibly react. And if it blew through that, then it would just go to this low. So that's how I pick sequentially, depending on how it respects that area. It doesn't have to respect it or show me on the hourly chart. This is the biggest overall picture that I can show for you guys for an explanation. But yeah, I took a short a few points from the peak. And took 12 points, and I could have rode that. I say that loosely because, like, would you really have ridden that all the way down? Maybe years from now when I have a way better idea what I'm doing. But it's cool to see that you can catch the top. You don't make it a habit and don't make it a goal to try to do that, because when you think it's the top, it's probably not. But it came all the way down over 100 points and smacked the draw. Smacked my target. It did not continue to the other targets. It decided to bounce around in here and do a bunch of junk. But there you have it. That's what I got. Hopefully that was insightful in some way, shape, or form. as of now, I still got to document this. Thought I saw something today. It was before 2, and at 2, our good friend Powell was going to be flapping his jaw, so price action wasn't super great. And I shouldn't have done anything, but it was only 4 points, not the end of the world. Could have been a lot worse, but I still got to document that. So this is where I'm at so far with the funded accounts. I could stop here for the week, but I'll see if something looks nice tomorrow. If it doesn't, I'm okay sitting, and we'll look at next week. So this is my first hour video, I think, and much longer than I expected. And I'm sorry it always drags on, but I hope you all took something from this video, and feel free to leave comments with questions or anything you would like to see or would like me to talk about. As long as it pertains to what I'm doing, I will tip things over on my desk and that all falls apart. As long as it pertains to what I'm doing, I'd be happy to talk about it. I'm sure you want me to talk about this model or that model or, all kinds of whatever's popular on YouTube these days. And I don't really know. I don't pay attention. I don't really watch YouTube. I like what I have. I study this, and I'm going to get good and master at this. And that's one of the best pieces of advice that I have for you is it's not the model that's going to make you successful. It's not the win rate that's going to make you successful. And it's not the risk to reward ratio that's going to make you successful. For the first, how long I was practicing this, that's a negative R, as ICT made plenty mention of and drove that home. It's less TP than stop loss, and I turned out fine. So none of that really matters. What matters is your consistency. Stay consistent. If it doesn't work out for you real well for a couple of trades, for a week, a couple of days, maybe a whole month. Month of October, when I was doing Nexus, I had 3 trades the whole month, and only made 15%, which isn't really that bad if you think about it, depending on your capital. But I didn't make very much. I watched every day go by and didn't make a trade. Out of potentially 20 trading days, not counting any news, I sat there for 17 of them. So, that's because that's the model I was trading. You just stick to it. You don't bounce around just because you get a few losses or have a bad month. Stick to your plan, stick to your rules. Don't let emotions get the best of you. Stay consistent in every facet. Stay consistent with your stop loss and take profit, with your emotions, with the strategy in general, with how you read the market, with whether you're going to use a fair value gap or an inverted fair value gap or an order block. Use the same thing. Use the same model. Use the same mentality. Just come at the market the same way every time, and you will be okay. Remember, there's a guy that I know that is a 4 out of 10 trader. Doesn't matter. Okay? Stay consistent, and just keep practicing. Learn, master what it is you're trying to learn before anything else. So with that said, I'll call it here. Like I said, if you have any questions or comments, feel free to leave those down below. And have a good day. Thanks for coming by.